Good day, everyone. My name is Peter Kincaid. I'm the CEO of Raintree Financial Solutions. We've got a packed house today and some great speakers. Today, we're joined by Elroy Gust, who's the CEO of Newlook Capital, Das Osman, who's the Chief Investment Officer, and Jordan Green, who's the Regional Sales Manager. Good day, folks. How are you?
Good.
Excellent. I'm going to hand it over to you to go through the presentation. I'll remind everybody that if you have questions, please type it into the Q&A box, and we're happy to answer questions at the end.
Excellent. Thank you so much, Peter and Raintree, for having us today, and welcome to everybody joining us. So wherever you're from, I hope it's sunny and warm. Elroy and I are here to talk to you today about the Newlook Capital Dental Fund, a fund that we're extremely passionate about, and we love any opportunity to share that passion with some investors. So we'll go through the presentation a little bit back and forth, Elroy and I today. And like Peter mentioned, please, if you have any questions, type them in the chat box. At Newlook, we pride ourselves on being open and extremely transparent. So no question is a bad question. We're here to help as much as we can today. So the Newlook Capital Dental Fund is something unique, and it's an opportunity that we have made available to the retail investor. I know myself personally, going in, starting with Newlook, I actually didn't know that you had to be a dentist to own a dental practice. So Newlook Capital has found a unique and innovative way to make it an opportunity to investors to be a part of the dental space. And we do believe that that the dental operations are, they offer a consistent and a stable source of revenue relative to other industries in the healthcare sector. So we are not dentists ourselves, but we definitely have a passion for dentistry. I'm not going to read this slide. You know, in our old offering memorandum, our old decks, we had a flow chart, and now we put it into an infographic. But essentially what we're doing is we've established the Newlook Capital Dental Services Trust, which will allow you investors to purchase trust units of the fund. The fund then uses the proceeds and the issuance of the debenture to purchase 9% secured debentures. And then we use the capital raised from the issuance of those debentures to purchase dental acquisitions. So we can buy anything in the dental space, whether it be a clinic or a laboratory, anything in the dental sector. So, you know, the model gets crazy, and you don't need to focus too much. Essentially, you're purchasing a 9% secured debenture of Dentaluk. And we say the words a lot when we're going through the presentation. We're going to be talking a lot about restricted assets and non-restricted assets. And I know in a minute here, Elroy, sorry, I forgot his name. Elroy is going to talk a lot about our operating partner, Dr. Sam. So Dr. Sam owns 27.5% of Dentaluk. He is the dentist. He is the master in his field. And then basically what it works out to be is the restricted assets versus non-restricted. When we talk about restricted assets, we're talking about client records and patient list. And then non-restricted assets, so where we really strip out that revenue and see that positive cash flow, is coming from things like hygiene production, wholesale products, and operating healthcare. So before we get further into the fund, I'm going to let Elroy talk a little bit about Dr. Sam and how he kind of became a part of the Newlook family.
Yeah, Dr. Sam has been a great partner. We've been partnered with Dr. Sam for almost 2 years now. And it took us a long time to find the right partner. It was quite an extensive and exhaustive search. We probably interviewed 20 different partners that we potentially could work with. Really dug into Dr. Sam, his relationship with his dentists that work with him, his staff. Really came away with a good feeling. And for us, when we found Dr. Sam, there was a couple of things that we looked at, and he really shone through in all of them. So he really has matured from a good clinician to being a business leader. He's truly acts as the CEO of the business, leads his team of employees and leaders at each of the clinics. He's really focused on sourcing, acquiring, and then integrating practices into a platform that he built even before we got involved. We've since improved on that platform as his partner. His head office team is second to none, we think. But it was really Dr. Sam's passion for the business, working with his employees, and really actively growing the business. Aside from being a great clinician, he really has matured into a great business leader. So he truly is our partner. He owns 27.5% of the fund. He's fully aligned with Newlook Capital and fully aligned with our investors.
Thanks, Elroy. That's awesome. Yeah, Dr. Sam, honestly, he's a wonderful gentleman, and I know that he's been really, really prevalent in the ramp up and during the pandemic. And we definitely know, like Elroy said, the alignment is key, and we're really proud to have him as an operating partner, especially during such unprecedented times. So why did Newlook decide to invest in dental practices? And again, it goes back to that sticky recurring revenue, that stability, and then the higher margins in the dental space over other offerings in the healthcare space. So dental to us, again, we are there to add value, and Dentallook, Dr. Sam and his Dentallook home office team are there to add value to the businesses by helping them with marketing different offerings, by adding rigor to their financial reporting, working with HR to implement stronger holistic approach to patient care, and really minimize that J-curve when we transition into Dentallook from the old practice. A lot of times when we're presenting at the very end, I always get the question, who's done this? Why are you doing this? What if everybody wants to do it? And the answer is simple. The mandate for the dental fund is to acquire 80 to 100 practices. There are 25,000 clinics in Canada. There is plenty of room for competitors to come in. We want to build a robust portfolio of practices that already have a history of generating a positive cash flow. They're in the market that Newlook is aiming to acquire, and then have that value add from Dentallook and Dr. Sam. About 2 or 3% of practices in Canada are already rolled up and working in a private equity umbrella. In the United States, I think it's around 30 or 40% rolled up. So you can see that there's an opportunity for a very similar trend to take space here in Canada. I think Elroy had a couple points that he wanted to make here, if I'm not mistaken.
Yeah, I mean, it's important to remember that Dr. Sam really does his homework when he's acquiring these practices. Very impressed with the portfolio that we've been able to put together with him. Our practices, the average age of our practices is about 20 years. So they're not startups. They're not turnarounds. They're practices that have been cash flowing strongly in their markets and are leaders in their markets. So really love the fact that they're well established and have been around for a long time.
So what is Dentallook looking for when acquiring a dental practice, and why would someone sell a dental practice to us? We're really looking for, like Elroy just touched on it, it's a very simple concept. We're looking for a practice that has a history of generating a positive cash flow and is just looking to take that next step. We typically are in Saskatchewan, in Ontario as a portfolio right now, but we focus on smaller, more rural communities because of their retention and the number of patients to dentist ratio. So there's not as much competition in those markets, and it proved actually to be quite a successful strategy during the pandemic as well, because the cases in those areas were a bit lower and less affected. So it was a good strategy to make it recession resilient fund, and now we've seen that the model is also proving to be somewhat pandemic resilient. So very proud. And why would someone want to join the Dentallook team? I mean, look at us, why wouldn't you? I think it speaks for itself. But aside from that, I think there's several options for why someone would want to sell the dental practice. It could be a succession strategy, a retiring dentist, maybe his son didn't take up or his daughter didn't take up in the family business, and they're looking to keep that practice in their community where they've built a very strong, diversified client base, and they want to make sure that those people and those patients are being taken care of the same way they're very used to. It could also be an associate who, has realized that he's a bit in over his head. He wants to remain minority equity, but he needs a partner that can add that strong business acumen, that rigor to their financial reporting, and support the actual business and books of the practice. So it's not one reason for why, it's do you fit the dental look model, and are you in a market where we can capture the client base that we're looking for? So there's several reasons, and I know I bet you Abbas is sitting there with thinking of a few more, but yeah, several different reasons. As long as the two parties are on the same page, I think it's a wonderful opportunity. And then to have Dr. Sam and his operational team backing your practice, you know, you can't really go wrong. As I mentioned, we are currently saturated in Saskatchewan as well as Ontario. You can see we have about 12 clinics right now and a really robust pipeline of opportunities just waiting to be captured, especially in this post-pandemic or post-transient pandemic era. So we're seeing some really, really unique opportunities, even coming out on the other side of this. Our most recent acquisition, Gateway Dental, fantastic practice in North Bay, Ontario. Their client to patient ratio is 1 to 1,908. That number just speaks for itself. Again, all of these practices have been in business for about 20 years. And again, they have that stable, recurring revenue, and they have a history of generating a positive cash flow. I always repeat this a million times because I find, you know, at Newlook, we define boring differently. We define acquisition differently. I think a lot of people associate acquisition with a turnaround or a need to do better. We are adding value to an already profitable business. So change your outlook on acquisition and start thinking about it the Newlook way. Elroy, I don't know if you wanted to talk about any of the practices a little bit more, or?
Yeah, no, the practices that we've bought in Ontario have been especially successful. And the ones in Saskatchewan as well. I know our pipeline is heavily focused on Ontario right now. A lot of rural practices in Northern Ontario is what we're working on now. We'll have some exciting news in the next few months around acquisitions in Ontario.
Awesome. Another point here with like the rural communities, and I always like bring it back to me, why not? I'm from downtown Montreal, and I had no sense of allegiance to my dentist. It was, I have a 30-minute lunch break, who's available? So again, that strong, diversified client base is just very prominent in these smaller, more rural communities where that client to patient ratio is so grand. So really, really great strategic thinking on the Dental Look and Newlook side. You can see here as if we've continuously seen that organic growth. This organic growth has a compound annual growth rate of approximately 7.9%. So this is as if the clinics were owned since 2017. And I know, Elroy, here you wanted to talk a little bit about the 9%, and I think we can let you get into that before I get into the investor profile.
Yeah, sure. I mean, looking at this organic growth, you can really see that our focus on the hygiene part of the revenue, the recurring part of the revenue, is actually proved out. And just in relation to the 9% that the fund pays, you know, I think we want to look at that risk-reward balance. And I think you want to keep in mind that banks in Canada, when they think about the dental industry, they look at it through this view. If you're a new dentist and you want to acquire a dental practice in Canada, banks in Canada will generally lend you between 100% or 110% even of that acquisition cost. Then they'll charge prime plus a half a point, and then they'll amortize that loan over 10 years. So you can really see how much risk the banks see in the dental industry. And then you can look at what we're paying investors, and you can see that blended rate of 9% is actually a really great return based on what risk we see in the industry.
And so this is kind of great segue into that 9%. So this is a 5-year rolling term. So that means it is 5 years from the date at which you invested. It is a minimum $10,000 investment. It is registered accounts eligible. So if you have that money sitting in your LIRA and you didn't know what to do with a locked-in account, turns out you can use it for private equity. So great opportunity there to make it a more tax-efficient model. It is, like I said, a 9% targeted return paid quarterly. And our track record is strong. Since inception in 2018, we have yet to miss a distribution, and we were able to fulfill our requirements during Q1 and Q2 in a pandemic era. So very, very proud of that. We are targeted to raise 120 million. Approximately to date, we're at 26 million raised. And again, with private equity, of course, There is always a limited liquidity, so there is a quarterly threshold of $50,000 on the fund. And if you chose to exit prior to the fund maturity, there would be some penalties, but I know your advisor at Raintree is fully educated and has contact with Newlook at any time, so they can go over all of that with you. This is a registered account eligible, as I mentioned, and you can choose to have your distributions paid in cash, or you can take advantage of our distribution reinvestment plan. So it's at a 5% discount. Instead of $100 per unit, you're looking at $95. And I mean, the growth rate just speaks for itself. So depending on where you are and what type of income levels you need, there obviously is a benefit to reinvesting. And then again, you'd get it all back at the end of the 5-year term. We understand at Newlook that proper risk mitigation is what leads to profitable investing. That's why we have a team of CFAs, CPAs, Harvard MBA, and a very diverse background at Newlook Capital that is there to ensure that this fund is sustainable and profitable. I know Elroy is going to talk a little bit about alignment, and again, that's a really big thing to consider when you're investing with Newlook Capital, and I can guarantee you that we are aligned from the investor all the way through to our operating partners in all of our funds. So we take these risk factors, we learn from them, and we definitely don't take them lightly, and understand that you wouldn't either.
Yeah, I mean, it's important to note that Dr. Sam, as our partner, owning 27.5% of the fund, he's fully aligned with Newlook and fully aligned with their investors. So you have to recognize that in the capital stack, Newlook Capital has about $6 million of our own money. Of that, $3 million is Dr. Sam's money, is invested actually, and it ranks behind investors. So always investors get paid first. Newlook does not get a return on that money until investors do. So it's important to know that that actually ranks behind investors, and investors get paid first.
Like we've talked about the team, you have Elroy and Abbas here with us today, so I'm so glad they were able to come and support me. I do a lot of these, so it's always fun to have another face with me. And then again, we have Gavin, Oliver, and Haas, and Tony. Again, they just add that business acumen, they add that rigor to our reporting, and they're there to ensure that we're meeting our own expectations as well as yours. I really liked what Elroy said about alignment, and I like to try to answer questions before they get asked. And one of them, and it's Dr. Sam, comes up a lot. Dr. Sam was a key component, and Newlook definitely made the right choice. And we, like I said earlier in the presentation, we really saw that relationship and how meaningful and important it is over the past couple of months. Dr. Sam did several things to help lift the demand finances off our back. I think he forewent his salary, helped with rent relievement, and also acted as a leader in the community throughout the reopening phases. He did several interviews with over 2,000 associates, at each interview attending to find out what he was doing to open his clinics safely and regulatory for his patients as well as his employees. Employee and patient safety and health is our top of mind at all times, and especially as we go into these new environments. Unfortunately, what Dr. Sam doesn't know is how often we talk about his demise. What if Dr. Sam were to leave? I don't like saying the other thing. You know, obviously he's a healthy, wonderful gentleman, but we do have a plan, and that's part of risk mitigation. You know, unfortunate things can happen. There are several scenarios in which if Dr. Sam were to leave, we would be okay. We have our key man insurance and alignment. We have also some wonderful associates practicing in all of our practice that could step in and assist while we found a suitable operating partner. And as the portfolio builds and becomes more robust and we see 80 to 100 clinics, we might have more than one Dr. Sam, and at that time, they would be able to fulfill his role while we found a suitable operating partner. But again, no ill will going that way. It's not going to happen.
Yeah, that's right, Jordan. I think there's 35 associates working in all of our practices. So lots of dentists available.
Yeah, we do. We have, and we also, like I said, these are dentists that have been in business for 20 plus years, you know, servicing over 30,000 patients. They know what they're doing, and they're learning from the best. Another thing that we didn't talk too much about yet, and I like to leave it a little bit to the end so that we can focus more on what the fund is before we get into how it's performing throughout COVID and post-COVID. So you'll see on our right-hand side, those are the percentages of the ramp up after the closure. So as clinics began to reopen, how did they perform? And you could see that we had a nice growth of 20% week after week, getting all the way back up to over 100% today in terms of our pre-historical average revenues. So, you know, everybody was worried what's going to happen. Where will people's priorities be once the clinics open? Are they going to get their teeth cleaned? Are they not? Surprisingly, everybody wanted to get their teeth cleaned post-COVID. The phones were ringing. Dr. Sam implemented wonderful strategies to ensure everybody was doing it properly, healthy, and safely. And like I said, we're seeing upwards of 100% of our historical revenue. So while the clinics did close for about 7 weeks, we went into that in a very good space. We had enough cash in our account to service the quarterly distributions. We had minimal debt or leverage on the fund, which put us in a great financial position going into a COVID pandemic. And next, everybody asks, and I'm sure it's being typed right now, I can't see, what happens if there's a spike in September? And honestly, I've wrapped my head around this a few times. I got asked a lot. And what happens is, well, we've already done it. We saw how successful and sustainable and resilient this fund can be in an unprecedented era, but now we've already been through it. So you can definitely be sure that risk mitigation is top of mind right now, and the Dental home office team are working around the clock to ensure that should there be a spike, we can operate as usual in this new environment. So if we could do it once with our eyes blindfolded, I know we can do it again with practice. So it's, you know, we can't predict the future, and it's just our opinion. But again, I just like to reiterate, if we could do it once, we can definitely do it again.
Yeah, Jordan, that's a good point. I mean, I always like to remind people, I never am excited to go to the dentist, but apparently everybody else is. Our patient counts and the number of visits after COVID actually was right back to where it was before. So it's not only the revenue that was there, the actual patient visits were there. That was the important point that I took away.
Yeah. Yeah, like I said, Elroy, I wanted to thank you and Abbas for popping in every couple of seconds. I can see your head on the right. And again, thank you to Raintree for the opportunity to explain this excellent opportunity available to you. Newlook, you know, like I said, we're passionate about our dental clinics and about the fund, and we are really looking forward to the opportunities for acquisitions in the pipeline moving forward. And if you have any questions, we are all here to answer them. And I hope we explained the fund properly and that you enjoyed our presentation. And if you ever need anything, please do not hesitate to reach out.
That's great. Thanks, Jordan and Elroy and Abbas. A couple of questions, and I'll encourage attendees to type their questions into the Q&A box. You'll find that at the bottom of your Zoom screen. So first question, what type of multiples on cash flow or EBITDA are you paying for these dental practices, and are you seeing that change at all?
We're going to let Abbas answer that one.
Hi guys. Yeah, so in terms of multiples, you know, we are seeing historically we've been seeing anywhere between 6 to 8 times. After the pandemic, we are seeing the average dropping a little bit, and currently we are looking between 5 to 6 times.
Excellent, thank you. And in terms of acquisition opportunities, you mentioned that you're focused on in Ontario right now, maybe a little bit more rural than urban. Are there opportunities to acquire dental practices outside of those jurisdictions?
Yeah, so we are seeing opportunities all over Canada. Actually, the pandemic, you know, opened a lot of doors for us. It's a huge opportunity because most of the doctors and the dentists, they realize that, you know, I want to practice. I don't want to manage a dental practice during a pandemic. Okay, I'm not going to, you know, scratch my head to source PPE, to train my employees, you know, to handle the banking relationships. So we are seeing a lot of dentists that are willing to sell and concentrate on dentistry rather than concentrating on the business. Coupled with that as well, most of the dentists nowadays, they were highly leveraged during the pandemic, and eventually they suffered during the closure, and they want to take that business risk and focus only on dentistry. So it's a great opportunity for us. This is what happened with us with North Bay, and this is what we are seeing going forward. In Ontario, we think there is a huge opportunity. Before the pandemic, the multiples were on the higher side, compared to the rest of the Canadian market, but now they are in line, and we would like to take opportunity of that and build our portfolio.
Yeah, and it's important to note that the clinic in North Bay, our latest acquisition, we actually just closed that in July. So that was actually our first acquisition post-COVID.
Are all of your practices open now?
They are, yes.
All our practices are open across the portfolio. As Jordan said, we are back to normal. We are performing all the procedures. And we have to give, credit to the operational team at Newlook. From the day we closed, their focus was, we know that we are going to open. We don't know when, but we need to be ready, prepared, to be in business again. And this is what they did over that period of, during closure. And it proved out in our ramp up, relative to other doctors, other practices that we're talking to, we are far ahead of the curve.
Yeah, and Jordan touched on it a little bit. During that closure period, Dr. Sam led a series of webinars explaining what was going to look like after pandemic, how people should open up correctly. He really took a lead on that in the industry. And that really added to our pipeline. He was recognized as an industry leader, and we had so many dentists that contacted us afterwards regarding an acquisition following that. So our acquisition pipeline, very robust, and we're very excited to dig into that pipeline and tackle it for sure.
Yeah, I mean, I can only speak personally, but our family dentist, you could tell they struggled mightily with the reopening. They sort of canceled everyone's appointments. Then they had a flood of people wanting to make appointments, and they had people canceling. It really, and there was a flurry of emails trying to communicate with their patients, but it just all seemed very disorganized. And I'm sympathetic to it. It would be quite challenging, when you're focused on dentistry and you've never had to live through this before. There's some real operational challenges that you have to think through and navigate that I think for the sole practitioner were probably very demanding.
Exactly, and this is why we are proud of our operation team at Newlook, because they did, they were ready, prepared, to deal with the pandemic and to deal with the reopening. And this shows how strong the team is. And this is why we are confident that, going forward, acquiring more practices, we can integrate and create value in the portfolio.
That's great. Folks, I want to thank you for your time. This was a great presentation, very informative. Actually, we got one last question. What is the financial advantage to the dentist in transacting with you?
So, the dentist, there are a couple of, different scenarios why the dentist is going to sell to us. As Jordan said earlier, some of them, they want to retire. So eventually they want to have a plan for their retirement, and eventually they are getting, they are liquidating their position. Some other dentists, they sell their time. The dentist will sell his time. Every time he's doing a procedure, he's getting paid. So the financial reward for them, rather than spending X number of hours a week just on managing the business, he's actually performing procedures and making money out of that. And in addition to that, he's getting paid now. While in certain cases, he still owns part of the practice, and he is riding the upside with us, whereby we can create more value for him in terms of his existing practice.
Yeah, I mean, you have to remember the multiple that's paid for a single practice is a lot different than the multiple paid for 50 practices or 100 practices. We're welcoming dentists to come along with the ride with us, and trade at our multiple when we exit, rather than a multiple of a single practice.
Well, and there are some operational efficiencies and as I understand it, increased revenue opportunities that I think Dr. Sam is focused on, not just in his practice, but I think sharing those opportunities with associates that work with.
Yeah, definitely. The economies of scale when we own, you know, multiple practices is, you know, is far better than owning one practice for sure.
That's great. Folks, thanks for your time today. Excellent presentation. It was great to have the update. For those attending or watching or recording afterwards, please talk to your Raintree Private Wealth Advisor if you're interested in learning more about this investment offering. Thanks, everyone, and have a great day.
Thank you.
Thank you.